With so much news centered on politics these days, it's easy to get lost in the rhetoric. And that's regardless of which side of the aisle you're sitting on. That's why I think it's important from time to time to review what's really happening in the economy and in the market. So, sort of give us a reality check, so let's dive in. First, let's talk about manufacturing. Domestic manufacturing is growing at its fastest pace in 14 years. New orders and backlogs both point to a very strong economy, and they're both only getting stronger. So that's good news, right? Also, both consumer spending and business investments are moving in the right direction, and that's, of course, up. What's interesting is that this is happening while international economies are slightly slowing. Now, some experts suggest that lower taxes are helping both consumers and business spending. This could be true, but of course, this growth is also causing more inflation. Now, we'll get to that shortly. Employment. As you might imagine, with a very fast-growing economy, they're soaking up all the employers can find. In fact, last month we added over 223,000 jobs, and the employment rate dropped to 3.8%, which is the lowest it's been since 1969. Now, because it's so hard for employers to find workers, they're having to pay higher wages in order to attract people in. And hourly wages rose at a 2.7 annual clip. Wages could grow even faster over the months ahead. We'll have to watch that. Now, as good as this looks, here's an interesting twist. We might actually see fewer jobs being created over the months ahead, only because employers are just not finding people to fill their jobs, the open jobs. Let's talk about interest rates real quick. With an expanding economy, it's no surprise that the Federal Reserve reaffirmed its intention to raise interest rates in the near future. Still, they said that even if inflation got over the 2% hurdle, they wouldn't be overly concerned as long as it was moderately over 2%. That means they're probably not going to be super aggressive with interest rate hikes. But at least for now, they're going to probably stick with their announced 3 to 4 interest rate increases in 2018. Now, inflation numbers right now are a key indicator for economic growth, that and interest rates, and I think also for the market, and that's why I continue to follow it and talk with you about it. Let's talk about international trade for a moment. The international trade landscape is changing very quickly. As I write this, President Trump is imposing tariffs on steel coming from Mexico, the EU, and Canada. We'll talk about China in a second. Now, all three of these have responded by announcing their own reciprocal tariffs on American goods. Now, this is not a great situation to be in for anybody. Trade wars typically end up with everyone losing. And well, if they go on long enough, consumers pay more for products, jobs become more scarce, and the economy is threatened with recession. What's interesting is that the administration's imposition of tariffs reverses a previous decision to exempt the EU, Mexico, and Canada from the tariffs. Also, steel prices in the United States are already 50% higher than they are overseas. And what's also interesting is that while Canada exports steel to the United States, they also import steel products from the United States. And for that reason, it's kind of hard to understand precisely what the purpose of these tariffs, especially against Canada, are meant to do. And for that reason, I think it's very possible that these trade disputes will be resolved. But let's talk about China for a minute. Almost as soon as President Trump took office, he made it clear that he intended to impose tariffs on certain Chinese goods. Now, just before those tariffs were imposed, it was announced that China and the United States were close to finding an agreement and that the tariffs probably wouldn't be imposed. Okay, so that was good news and people got optimistic. But that all changed last week when the administration announced that the negotiations weren't going as well as they thought they would. And as a result, the administration is moving to slap tariffs on over $50 billion of Chinese products, unless a last-minute solution is found. Now, even as trade threats are looming, we can't be sure what actually will happen. Will the parties be able to find a negotiated settlement at the last minute? Are these tariffs just threats simply negotiating tactics? They seem that way to me right now, but of course I don't know for sure. And I do know that an extended trade war with China or anybody else is probably not going to help anyone, including the United States. This is certainly an important issue, and I'll continue monitoring and reporting back to you. Let's talk for a minute a little bit more about the EU. The big story in Europe right now is Italy. The Italian economy has been stagnant for several years. They're battling high unemployment and a huge amount of debt. Now, as if that weren't enough, right now they're dealing with political uncertainty, which may even threaten their continuation in the European Union. Now, I don't expect that issue to be a major problem for investors over the long term, but it is something that's difficult to predict, so it's something that's got to be continued to be monitored. Other important international issues include North Korea and Iran, of course. If President Trump and Kim Jong-un actually do meet and are able to work through the important issues that now separate our two countries, it could end up giving the markets a huge boost and the world economy is a huge boost. Now, if the talks don't happen or if they don't accomplish much, I still anticipate that having few long-term negative consequences politically or economically. However, what would be a negative for the market is if North Korea sort of rattles its sabers and behaves menacingly and belligerently toward its neighbors. If that happens, we could see market volatility. And it's the same situation with Iran. If their military escalates and they escalate world tensions, we could see an impact. So let's summarize. Currently, the economy of the United States has a very strong foundation. We're growing, and the economy has expanded for 9 straight years without a recession, and that's almost the longest expansion ever recorded. Corporate earnings are strong, unemployment is at a record low, and inflation is still pretty tame. Now, the current strength is, of course, welcome news, but remember that the market usually anticipates what's going to happen 9 months down the road, and that's why things could change quickly even if the economy is strong. And that's why, I've got to continue to monitor it. And also, of course, we have these wild cards of trade conflict and military potential conflict. So that's why I continue to monitor it, and that's why I continue to come back to you with updates. And I welcome your input. If you have any questions or comments, please send them my way. I look forward to connecting with you. I'd love to connect. Just let Kim know that you want to talk, and she'll put it together. Thanks.